Okay, so you're logged in now. So what I need you to do is go to new chart. And the instrument we're going to work with is NQ. NQ, the latest one is 1223. If you don't see it up there, then go to
623. There's the NQ 620. Go up one, Crystal.
If you don't see it,
there you go.
No, that's 623. If you don't see it there, go to futures. No. And go to NQ3 1223. NQ 1223. That is the latest contract. Now these are on contract. So they in December, this contract will expire, and then when we get there, I'll show you what to do to roll over to the next contract, which expires in March. So it'll be constantly changing. That's just how futures works. Okay, so here, all right, this is just to set up the chart that you're about to see after we get it all configured. So what you want to see is annotation tool. Okay, so here you want to just going from the top down, you'll leave it on last. The type will remain at, if we're going to do a minute chart, we'll change this to minute. If we're going to do a daily chart, we'll change that to daily. So for now, first thing I'm going to do is have you do a daily chart. So type is going to be daily. Change that second to daily.
Or was there a daily or day?
Day, I'm sorry.
Okay.
Okay, 1 day is fine. Zeus, go sit down. Go sit down. Days 365 is fine. Don't have to worry about changing that end date. Break end of day, that's fine. Candlestick 3 is fine. The colors are good. Label NQ 1223, that's fine. Panel 1, right? Oh, that's fine. Go all the way down to where it says plot executions.
Mm-hmm.
You want to change that. Yours is fine, Crystal. Change yours to, oh, it is on do not plot. I think it's probably doing that because Devin's thing is already saved in there. So it's always going to be on do not plot. When it comes up initially for you, Eric, it will show plot executions, or to, if you hit the drop down menu, you see what other options. It will say text and marker. You don't want it to be on text and marker because that means every time you put a trade on, it's going to mark that and keep it on your chart, and it gets crazy looking at that all. So we always leave this as a default as do not plot. So initially, when you're starting this, Crystal's already done it before. That's why it came up as do not plot. So what you have to do is go down to where it says preset, below that. Preset.
Mm-hmm.
Crystal.
Were you saying below plot execution?
Yeah, right there, the bottom corner.
The bottom corner says preset day. Right there.
Oh, okay. It didn't look clickable.
It is. And you would just save it. That way, every time it comes up, it'll come up with this as your default. It won't have to keep changing that do not plot thing. It's already done for you. Okay, and just say okay. All right, so what's coming up here is a daily chart. What that means is every candlestick, well, the red and green candlesticks, bars that you see are called candlesticks. And we'll go over, I can go over that a little bit later, how that works. But for now, setting up this chart, what we want to do, right now you see the far right edge. This over here is your far right edge. So what we want to do is have some space between the last candle and the far right edge. There's a reason for that. The way we do that, is to right click in the chart, and go down to properties, all the way at the bottom. And that comes up. You want to have, let's see, right side margin. We'll put that at like 150, 125, and just get some a good 100 to 125. Okay. Scroll down a little bit to where it says colors. Keep going, keep going. I want to find grid lines. It's under lines.
Hmm?
Grid line, and you want it might already be there. Crystal's might already be set up, but hit the drop down menu next to grid line and make sure that is set at transparent.
From solid or the color?
Color, transparent. Hit horizontal first. We'll do each one and make sure this is transparent. Okay. Yeah. All right, okay. Now do the same thing for the vertical. Okay. All right, now hit the preset again. Save. This way, every chart you do, you don't have to keep doing this. All right, and apply that, and okay. Okay, so now your daily chart has room to the far right edge and the side of the chart so that when candles pop up, new day is going to pop up here rather than over here. Okay. The next thing I want just so you can see what happens to know when you are not at the far right edge. If you would hit your okay, click on the chart, hold the chart, like click and hold and move it to the right side. Crystal.
I hear you, but I don't.
Click and hold and move to the right. You're not holding. I want you to click your.
Yeah, I'm not letting the, I didn't let
If
my.
you are letting go.
I did let it go. It's not moving.
Are you right clicking or
Left.
I want you to left click.
Yeah, I didn't hear that part.
All right, stop. That's good. All right, so if you look up here, that tells you you are not at the far right edge. So a lot of times when you're new, you're thinking, oh, why is my chart not moving? Is because you've moved your chart some kind of way, and this is telling you you're not at your far right edge. This is not the last candle on the chart. So to take that out, you always click on any arrows that you see up here. Just click on it. Now you're back at the far right edge. Okay, that's something new people always get caught up on that being an issue. So you can see that happening. All right. So another thing, few things I want to load onto this chart. And we're going to go to this little icon right here. This is your indicator icon. And we're going to load, this is a daily chart. It's going to be different from others. I know Crystal has this top dog icon. We'll get into that later, but for now, just a basic chart that we're setting up for the daily. So we don't do bar timers on daily because it's daily. What do I need on this one? Okay, I need drawing tile tool. So it's all in alphabetical order. Just scroll down to drawing tool tile is what it is. Drawing tool tile. Click it, double click it to bring it down to the bottom. There you go. All right. So on the right side, this is where you edit any indicator once you've got it down here under the configure portion. So here for the drawing, anytime you put an indicator on, you want to erase the labels. So erase the label. And the reason you're doing that is if you don't erase labels, you're going to see them all in your charts lined up here, and it gets to be very convoluted after a while when you got multiple things on your chart. So we don't want to have that. We want a clean chart. So always erase labels. Now, for this, we're going to go to the next one down, which is drawing tools. Okay. And on here, you got to double click drawing tools, bring it down to the configure. There you go. Now you can do it. Drawing tool. Yours might already be set up because they haven't had it before, but make scroll up so you can see this list. Or make that bigger. You can make this panel bigger. There you go. Okay, good. All right. So I'll just tell you what we do need. We don't need ellipse, so uncheck that. Have that checked. Don't make sure it's unchecked. You don't need extended line. Uncheck that. Fibonacci extension. Uncheck that. Fibonacci retracement. We are going to use that, so we'll keep that. Okay. Let's see. Horizontal line. Check that. Line is a trend line. I'll show you what all this is in a minute. We'll keep that. Okay, keep going down. We don't need ray. Uncheck that. Rectangle, we want that. Keep that one. Yeah, rectangle. Yeah. Scroll down. We don't need text. You can take text off. The ruler, check the ruler. And check vertical line. Yeah, look at this check. Yeah, okay. And let's see, visible and template. Yours is probably already saved, but do it anyway. Template down at the bottom. Save. Save as default. Okay. Say yes. Okay. All right. So now say okay. All right. So here in your upper left corner, this is your drawing tools, which we use quite a bit of these. So you don't have to keep going to indicator and finding a tool to draw and all that stuff. So you don't have to worry about that as you go forward. Okay, let's see, what else do I want on this chart? I'm gonna leave that the way it is for now. Okay, so let's do this. Right click on the chart. We're going to do templates. Save as, not default, save as. And I know you got your top dog and all that stuff in there, but you're going to just put on here daily chart.
So Chris, I mean, based on your explanation, I'm gonna assume like Crystal has top dogs, she has two top dogs, and now he's creating the daily. So
Yeah.
we use multiple, we will be using multiple charts depending on, are you gonna get to that? And I'll just be quiet.
Multiple templates is what it'll be multiple templates.
Okay, okay.
Like on a daily chart, you don't necessarily need top dog on a daily chart. This is just for analyzation of the day. Oh, shoot. Y'all still hear me? Weird.
Yeah.
Okay. Okay. All right. Daily chart. Yeah, save the daily chart.
Yes, he's there.
You guys can hear me now, right?
Yes.
Yeah. All right. So you said we will have multiple templates that we'll be using.
Yes, you will have multiple templates. So save that, Crystal, if you didn't already.
Say that. You said go ahead and save.
Yeah, save that.
Okay.
Okay. All right, so now we can minimize this for now. We don't really need a daily chart up all the time. So we're going to do a new chart now. Another new chart. Minimize it. And then that little small dash. Yeah. All right. Now we're going to do another chart. We'll do new chart. Okay. In NQ 1223 up there in the instrument. should be the first one. Yeah. Now here, everything else is saved as a default, so we just need to save what type of chart we're going to do. So this one, we're going to do a minute chart. Minutes, minute. There you go. There you go. And we'll do let's do a 15-minute chart. Okay, and everything else is fine. Just go down and say okay. Okay, because we already did the save the properties, so it's always going to come up this way. You don't have to worry about doing that properties on every chart anymore because you got it saved, which is a good thing.
Yeah, praise God.
But on this one, we do need to add the drawing tool tile. So we go to indicators, upper little icon up there.
Was it this one?
Mm-hmm. Drawing tool tile, you got to double click it to bring it to the bottom. Yes, just
What was it called again?
drawing tool tile. These, this is alphabetical order here.
Uh,
Okay, all right, we're good. Now all you have to do is say okay because it's already a template on it or a default. We've already done that. And there you go. You got that on a chart. Okay, so here what I want you to do is I'm going to add a couple more things to your chart for this. Not everybody uses this, but I like to use it, so I'm going to give you what I do. Go back to indicators. I'm going to add one more for the minute chart.
go back to what, Chris?
Indicators. The indicator icon up top.
Hello?
Third, can you hear me?
Yeah, now.
The indicator app up top. Okay, we're going to go to bar timer. Forgot about that because this is a regular chart. Erase your labels. And leave it on each tick. I think we're good there. And you can say okay to the bar. I'm sorry, hit apply. Don't say okay yet because we still got more to do. Bar timer is applied. Now we're going to do, want to do pivots. So find pivots on the upper left. There it is. Erase your label on the right. Apply that. Say okay, just apply. Okay. Fibonacci pivot. Erase your label on the right and apply that. Right, let's see. Okay, just say okay for now. Right. I want you to put in on the icons up top where it has the arrow. We're going to make that crosshairs, local crosshairs.
Here?
Yep. Local. Okay, good. So we got that. Now, right click on the chart. Go to templates. I'm going to save a template for this as just a minute chart. Save as minute chart. Not top dog, but just minute chart. Save. Okay, very good. All right. So you guys are all set up now just for analyzing a chart. We'll get to other stuff as we go. Wait, one more thing. I'm sorry, I forgot this.
Oh,
Huh?
oh, I was just gonna say really quick. There's also a cheat, Eric. It's a way that I can send you these setup files, and you can just save it in a directory, and then you don't have to step through it. But if you want to step through it, that's fine. I hate all this setup part. So anyway.
Thank you.
All right. So
Okay, yeah, I'll probably run out and grab a laptop this afternoon, and maybe I can do that tomorrow. If you bring the file or bring the laptop, I can copy it over tomorrow and lower in the office or something.
Okay, yeah, and I mean they're very small. I can send them in an email, and then I can show you where to put them.
Okay.
All right.
Okay, so I just circled that. This is the chart trader. So on the chart trader, right now you have it off. We'll go ahead and show it. Chart trader, just click on chart trader. Next one, to the right. You went too far. It's right there, that one. Chart trader. Okay. So on the chart trader, this is where you go to put trades in, close trades. You can also set up what they call ATM strategies, where if you're in a trade, it'll save automatically put your stop losses, and you take profits on the page and all that stuff. Some of that you will use, some of that you will not. But this is where everything happens. This controls your money. So right now you are in simulation, which you see it's blue background or whatever background that is, gray, whatever it is. If you're not in simulation, which I don't know if you don't have a live account on here. So you may hit the drop down menu here.
Okay.
And if you click on Apex, that is live. So when your background is dark like this, which you won't have it yet because you're in simulation. Talking to Dwayne there. When you have everything set up, Eric and Dwayne, if you're live, this is how your chart will look. It'll be a black background. So don't get confused thinking you're in a simulation trade and you see this, putting the trade on, you're live, real money here. So go back to simulation. And you know you're in sim when it's in blue. Okay? On the right of this shows your order quantity. This is the amount of contracts that you're trading in at the particular time that you put a trade in. So when it's at one, this is one contract. You can have up to, I think it goes on the NQ up to 100 contracts, something like that. In the NQ, each contract is worth $20. Okay. Now we could also do what's called micro, the micro NASDAQ, which is MNQ. That's a different symbol. Right now we're in the NQ, which I'm just going to teach you on NQ, but just know that we can go to the micros, which is another market of the NQ. It's actually 1/10 of the NASDAQ or of the NQs. MNQ is the symbol. So on that one, instead of it being $20 a point, it's $2 a point. Okay. That's good if you don't have, when you're trading in, say you have your own money in here and you don't have a lot of money to put into it, or you have less than, it's a good point to say, I'd say if you have less than $10,000 in your account, you probably need to be in the micros. Could do it at 5,000, but definitely not less than that. So because you at one contract at $20 a point, your risk is you can't, it's a certain point it won't let you trade it if you don't have enough money inside that account to trade it. So you have to go down to the micros and trade those and go up from there. It's fine because you'll build it up anyway fairly quickly. You do what I'm about to teach you. Okay, so got that part there.
So just really quick again, Chris. So in the NQ is what, when you were just describing between NASDAQ and
$20.
So I got that, but what does it fall under? Like what market is it considered, or
NASDAQ.
NASDAQ? Okay.
Yeah. We mostly trade NASDAQ. It's the futures market. All these are futures that we're trading. Those, shut up. Get something to drink. I just had to bark at him. Okay, so let's see where else I want to be. Okay, we got that. So I'm going to have you guys set this up. So now we'll just have, you can minimize the 15-minute chart and bring up your daily chart. Minimize. Bring up your daily chart. All right, maximize it so you can see the whole chart. And you will probably need a mouse. I don't know if you're gonna be able to do that with your finger like you've been doing. I mean, you can do that, but when I show you what I'm about to show you, you're not gonna be able to do it with your finger. All right, we'll figure that out as we go. All right, so one of the first things that you have to learn when you're looking at trading is structure. So I'm going to show you guys a couple things today just to practice with it. Of course, Eric, when you get up and going, you can start practicing this initially because you got to have structure down before we worried about taking trades and how much money you're going to make and all that stuff. If you don't understand structure, you will never be a profitable trader. Okay. So that is the most important thing, is to understand structure and understand when the market is liable to change directions at certain points, because there's certain things we look for that will tell us the market is likely to make a turn. So this being a daily chart, we're just looking at generally where the market might go next in a certain area. So just going from left to right of the chart that I'm looking at right now, I have, there's a candle over here. So there's the low. Just be pulled over just a little bit, Crystal, just to see this candle. There you go. That's fine. That's fine. Okay, that's even better. That works. Okay, so here is a low, and this is a high on this particular chart that you're seeing right now. Okay. Now, of course, there are lows and highs as we go. There's highs, lows, highs, lows, highs, lows, high, low, another high, high, low. This did not go above that, so that's nothing. This is nothing either. Let's see here. Here we have a lower high. With the pullback there, it's not really a low, it's just a pullback into a lower high. Then you have the market come down and make a lower low than the previous low here, down here, basically breaking that low. Coming up here, making a lower high. Lower high. Then it comes down here, and it didn't quite go lower than this point. So, and just follow me along here. I'm trying to get you to see certain things as I'm doing this. Kind of maybe elementary, but as you get the flow of this, it'll make sense why I'm doing it this way. All right, so as the market comes down here, you'd see it did not make a lower low. Yet it came up and made a higher high than this high. So this is a point here where the market basically changed structure because it broke a low here. Clear this out. Because it broke a low here by coming down here. Then this is the start of possibly a new trend, except it did not break this low yet by this move here. So basically all it did was give you this is called a complex retrace to continue to trend upwards, which we'll get all into that later. I'm just throwing out stuff at you right now. But there's your low, comes up, still didn't make a higher high here. So this is basically just a sideways market that you see happening in this area right here. All this is just a sideways market. It's not trending. All of this is a trending market because you have higher highs and higher lows until this point. Then it started making lower lows and lower highs, but it did not continue that point to go back up to continue this previous trend. So this is an area where you will hear us say, oh, the market's just sideways right now. Okay. Now I'm showing you this on a daily chart, but it really doesn't matter what chart I show it on. It's all the same thing. So you'll hear the term fractal. Fractal means that whatever happens on a higher time frame chart, like a daily chart, is considered a higher time frame. A weekly chart is higher than that. You have a 4-hour chart, 1-hour chart, 30-minute, 15 minutes, and then you get into your lower time frame charts, which is your 5, 4, 3, 2, 1s, even down to seconds charts. Fractal means that whatever can happen in a higher time frame, the same thing can happen in a lower time frame. So I can teach you something on a daily chart, and that same thing can happen in a 1-minute chart. Exact same thing, just on a 1-minute scale, right? So don't ever get caught up on, oh, that's a huge chart, or being that it's a long daily chart, and think that you can't do the same thing in a lower time frame chart. So what you need to gather from that is that when you are looking to take trades, there are certain types of traders. You got to figure out what type of trader you are, because I can't tell you that. I can just show you what to do and what to look for on a chart, but you have to determine for yourself, okay, do I want to wait for a trade, to take a trade for a day or two and let that trade run for 2-3 days? Or do I want to be one that is, that's called a swing trader that goes from day to day? Or do I want to be a day trader where I am taking my trades on a smaller time frame chart, looking for smaller moves, but I'm in and out of the trade in minutes or day in a 90 short period of time?
Are there different games?
They absolutely are. Yeah, you're going to make, yes, when you are beginning, most beginners don't try to be swing traders because it's a different animal. It's like getting into a chart in January and holding it till August. Actually, on here, Crystal, put your crosshair on that. Local. And you can resave that template. Just right click, templates, load, no, save as, I'm sorry, save as, my bad. And daily. First one. Save. All right, yes. Okay, so like you could be in a trade forever on a daily chart if you took trades from here. Also, taking trades on a daily chart or any higher time frame chart, you're going to have a bigger stop loss. We always have stop losses when we take trades because any trade can lose. You just have to be comfortable with that when it comes to trading, that you are not going to win every trade. It's impossible to be 100%. So you expect losses. So if you're going to expect to have losses, then you have to manage your losses by setting proper stop losses. A stop loss is basically a point where you say, okay, the reason I got into the trade no longer exists, so I don't want to be sitting here waiting to see if the market's going to come back to where I want it to come back to for me to be profitable. That is how you blow an account, which you will do because you're new and you're going to be excited and you're going to want things to happen when you want it to happen, because you have to learn. This is something that is a process that I tell everybody, is that you have to be comfortable with losing trades if you're going to be successful. If you cannot get comfortable with losing a trade, you will never have a profitable account. You may make some money here and there, but you will lose it because you're not comfortable with losing trades. So you will never stick to a certain strategy to wait on that to happen. Trading is something that is, I would say, is 90% mental, 10% of just me showing you a little something to do and look for the ins and outs or the movements of what you need to be doing. 10% of that. The
So,
rest, go ahead.
oh, so since you've been in the financial thing for some time, so I think you can relate to this example. So essentially, like when I'm dealing with financial advisors and stuff, and maybe they taking my money and moving it into something else, and now they have me go through some questionnaire and ask me, um, I forget the exact questions, but they're trying to see, I guess, my tolerance on,
Yeah,
I guess,
your risk
my
tolerance.
risk tolerance, and usually it's
Some people
moderate to,
are aggressive, some people are
yeah,
moderate,
those
people
are the words,
are
yeah. Like,
conservative,
yeah, so usually I'm like moderate to conservative.
which is fine. So
Okay.
but think of it this way, it's two different animals there. It's apples to oranges. So what you're referring to is not trading.
Well, no, it's not trading, but in general, my personality type, I don't like to lose. I don't want to
I,
lose. I want to
I
lose
got you, but
minimal,
listen to what
minute.
I'm telling you.
Yeah.
Listen to what I'm telling you. Nobody likes to lose. But
No.
what I'm telling you is that in trading, you must be comfortable with losing. It goes against the norm.
Okay.
That is why, and these statistics are real, 97% of all people who try to trade are failures because they cannot handle losing. I say they're failures, they're not profitable, consistent, profitable traders. They may make some money here, lose it, make some money here and lose it. You have to get a mindset of trading of this is a process that open that door.
So when you're setting like your stop loss, is that like a percentage? Like I'm cool with like losing 5% or something. How does that whole stop loss thing work as
So
far as set?
the stop loss is a part of the strategy. So basically, at any point, you want to only trade. Some people go up as high as 3% as a stop loss max, 3% of your account value. Um, and some people say stay within the 1 or 2% as a stop loss max. And what I mean by that is, let's say you have a $5,000 account, and you're saying, okay, I'm trading on the Nasdaq, which is $20 a point. Well, if I'm saying I'm really willing to risk 3% of my $5,000 on any trade, so that's $150 that I'm willing to risk on any trade because I have a $5,000 account and I want to stay with 3% max on stop loss. Well, what that means is that if you're on the Nasdaq and you're trading $20 a point, that means that you can only risk 7.5 points as a stop loss. So if you're on the daily chart, that is darn near impossible to do that because these are huge moves. If you look at, this is your chart. You know what? Since we're all set up, let me go to my chart so I can move freely to show you certain things. So stop sharing for me, Crystal.
Okay.
Let me go. Let's see. Okay, you guys see my chart.
Yes, sir.
Yes.
These are just pivot, monthly and weekly pivot levels. I didn't put that on your chart yet, but I will later. Okay, so if you're looking at trading on a daily chart and you say, okay, I want to be a swing trader. All right, let's say that, let's trust me on this. This right here is a potential trade based on this setup that I see here. Okay. And let's say you want to take this trade. Well, the stop loss on this trade means that I'm willing to get into this trade as it came back up into this area. And I'll explain what that area is later, because it's all the same on any chart. But from here to where the stop loss would be either here or here is, and I don't even have the ruler on this one. Put that on this chart. So the stop loss on this chart, on that particular trade, if I got in down here, because it would be actually up in this area, so the high of this candle is 175 points. So it's impossible to trade off the daily chart with a small account. Does that make sense so far?
Yeah.
Okay. Now, keeping that in mind on a yeah, check this. No, let me just bring in a minute chart. Hold up this second. Got to change the template on it. Pulling this from some other screen, so that's why Crystal knows. Disregard this down here for now. All right. So here, this is a 5 minute chart. Let's do a 1 minute chart. So 1 minute chart right here. If I was saying I wanted to, let's see a viable trade that I would have taken on this chart. Okay, here. See it was. All right, so here's actually have an area marked out where a trade was taken. And it taking the trade from here. I'm going to take this trade, then I have to look at a stop loss on this chart of this swing low right here. So if I got into the trade when this came down here to that swing low, 12.5 stop loss. So if I had $5,000 in my account and I wanted to trade this at one contract, this is breaking the rule, even on a 1 minute chart. So this is where in some cases, you have to be like, oh, that stop loss is too big for me. Or I can drop down to even lower time frame to possibly take the trade if I can see the setup there. We actually go all the way down to the 10-second chart. I'm just not going there right now, but I just want you to see the concept of understanding stop losses and how you have to relate that to your account value, and you have to make a decision. Is this trade too big for me based on the stop loss, or can I take this trade? Everybody follow me in with that so far?
Yes, but I have a question. So, with the stop, is that something that you set prior, like when you first logging in, or is that a preset, like how we preset and had templates for all this? Can you set your stop loss, or before each trade you need to put in a new stop loss?
You can set a standard stop loss in your as an ATM strategy, but you don't want it to be set at the absolute minimum. You want to set it where you can move it. Meaning I may set a 10-point ATM strategy with I set a trade is going to automatically put a stop loss at 10 points. Then I'll move it to where I want it to be.
Yeah, okay.
You can do that, yes. But I wouldn't recommend just saying, okay, 7 is really a small stop loss. You just have to know in your head, this is the largest stop loss I can take based on my account today.
And then, like what you just pulled up, is this just like some prior simulation or whatever? Because you already had that marked where I guess you took a trade, or
This was Friday. This was Friday.
okay.
Yeah, at 9:40. This was a trade that set up for this to come back to this area. And yeah.
And you did this on I guess, the minute chart.
It was marked on the minute. I actually took this trade out of a 10-second chart. But again, I'll show you that later. Remember, everything's fractal. So I could just trade off the minute, but I don't trade off the minute because I still don't like the stop loss sizes on this. So I'd go down even further. I'm only showing you this because I need you to get the structure first. I'm not going to go into the
No, I understand. But
chart.
I'm shocked because, like, in all the stuff you showed me, like over the couple of years, I don't think you ever, like, you done moved into a new territory. At least your conversations with me, because I don't think you ever talked about like seconds as far as like going that
No,
low.
I haven't.
Yeah. So interesting.
There's a few things that I haven't talked to you about.
No, I know, but I'm just saying as far as the growth and just your trading.
Gotcha. Yeah.
Yeah.
So, but I just want at this point, I just want you to see the different nuances of trading. That you could be looking at something on a daily chart, but you got to bring it down to where you are, where charts you're trading on, and be comfortable with it, because it's all fractal. Same thing's going to happen here as it will on a 10-second chart.
No, I got you. So is your comfort zone now like kind of watching the minute chart and then taking trades on a lower scale?
Here's what I do. I go start at I'll look at the daily first. I'll look at the daily. I'll look at the daily to see what is the probability of today. So when I'm coming into the market, there's a process of the day. Looking at your daily is looking at, okay, what is the likelihood of what's my bias for the day? So if I came in here and I saw this candle being created, because I wouldn't have caught it down here to see this happened at 6 p.m. the previous day. So I'd be done trading. I wouldn't be looking at this until maybe 9 a.m. the next day, just to see where I'm at inside this daily candle. But if I'm seeing that this candle has already moved above the previous day, and I'm looking at yesterday's candle where it closed in relation to the previous day's candle, this tells me that we should be going up to at least this area here, because I would have these pivots on the chart already to know that this is going to be an area that the market is going to slow down at. But it's going to most likely come up all the way up to this high.
At minimum. Yeah.
Not a minimum, no. Minimally is here, which it did do that. This is where I'm thinking it will likely go here.
Okay.
Before it possibly decides whether it wants to continue higher or come back down even further. But you'll learn that as you go as to why that is. So you look at it in terms of analyzing your chart from a higher time frame and break it down to a lower time frame. So if I come in the middle of the day and say the 9 o'clock has already ran up here overnight and it's up here, okay, fine. One thing I'm looking at is where did the market open? So I know it opened down here. Where did yesterday's close happen? I know yesterday's close was here. What else am I looking for? Yesterday's close, yesterday's high and low. The low is down here from the previous day. That would be irrelevant with this doing this, but at least I'll know where it is. So I know that, okay, I have the open here, yesterday's close is here, and right now we're above all of that. Likelihood is that we're going to continue up for the day. So that gives me a bias. Okay. Next, I'll go to the 15-minute chart. And on the 15-minute chart, all I'm concerned with on the 15-minute chart is, I'm not trading it either. Oh, these markers here, which I'll put that on your charts later. These are the highs and lows of the day, previous day. Is what these are. The lows are down. Yeah, this is the low and the high of the previous of Friday, what this was. So on the 15-minute chart, though, however, when I'm coming in, let's say at, let me make this bigger. Let's look at, you see my time down here. When you come in the mornings, if you're trading in the morning, I mean, it doesn't matter when you're trading, but you still need to mark your chart this way. This particular market, being that it's a futures market, it's going to have its major movements are going to be between 8 a.m. and noon. Then there's going to be a lull, usually between 12 and 1. And I'm talking Eastern time. And then it'll pick up between 1 and 4:30 or 4 o'clock when the market closes. Okay. So knowing that, we do not trade, at least I don't trade. I know we have some people that still do it, which I think is not smart to do. But between 12 and 1 o'clock, you do not want to be in the market because the market basically is doing some really crazy stuff between 12 and 1 o'clock. So don't put yourself susceptible to that. After 1 o'clock, you can start looking for setups that usually will begin at 1:30 on if you're going to trade in the afternoon. Okay. So what you want to do is mark that up every day. Is say, okay, let me see, 9:38 from 8:30 a.m. is here. I'm in the 15. Yeah. So 8:30, what I'm going to do is put in, I don't know the chart. Let me fix this.
And this can be preset, or
you have to do this part every day. You have to know to do it. It's not going to preset because you have to where it's going to be every day.
Okay. No, I didn't know you can just put in the time.
Yeah, this is something new. Again, this is going to be some stuff that I'm telling you now I haven't told you before.
Okay.
Right, so 8:30. I want to put a line there. And then 12 to 1. Especially when you're new, you definitely want to do this. Because you will keep on going and get, if you're in here all day, and you'll stay in here all day, which you shouldn't be. What I'm going to do is change these colors so I know I should stop trading. And then another at 1630, which is 430. Actually, we'll say 1600. Okay. So basically, I am no longer trading after these periods of time. I'm no longer trading after between 12 and 1, do not trade. Now you see right now on this chart, it's fine that day, but most days you're gonna see ugliness in here. And then after 1 o'clock, I can come in and look for a possible afternoon setup, and it usually will give you some type of move after that, after 1:30, which you see this is like 1:45. Yeah, 1:45 until 3. That's a common thing. Doesn't happen all the time, but most of the times you will get an afternoon and a morning setup. Right? So between 8:30 to 12 is a trading time. 12 to 1, no trades. After 1, look for setup. 1:30 on, you can look for trades at that point. Okay?
Yeah.
So from there, what I'm looking on the markup is I'm kind of jumping the gun a little bit, but okay. What I want to see here is where is the current high prior to the open and the current low. All right. So here, where's my first high? Is right here prior to 8:30. I'm going to put a line there. Just excuse these colors. I'll go in and change these. These you can make templates of what color you want, whatever.
So Chris, question. How much time do you spend setting up before you like start trading for your day? Like right now you're walking through the setup. So
this is a couple of minutes process to get a quick look at the daily. Like I can look at the daily and say, okay, yeah, should be up today. Let me go mark 8:30. These here, I don't really need to do that because I don't really trade after 11 myself.
Right.
If you sat in the group, because I know you're in the Telegram group, Eric, is that you hear them talking about this all day long.
All day. Oh.
Yeah, I mean all day.
They got stuff going on right now that I don't even know what they're talking about, but yeah, all day.
But I absolutely refuse to be in the market after 11 o'clock. I just won't. Maybe 11:30. You definitely not seeing me at 12.
And
if I'm at 12, I'm listening to them because they're doing something crazy. And I'm just tripping out with them or something, but I ain't got nothing else to do. But
your general, and I know you said it before, but your general philosophy for that again is
that I don't want to be in the market all day. I don't want another job.
But it's not because, well, I think you said that the biggest gains are just generally in the morning anyway, right?
They are, but you can have some big gains in the afternoon too. I just choose not to.
Okay. And I mean, I guess that works for people like Eric and I, because right now we do have a main job.
Right. So you have to determine, okay, what times can you possibly trade?
Yeah.
Because if you say, okay, well, I can't trade during the daytime, NASDAQ may not necessarily be the chart, the market for you. Because if you look at what happens overnight, not a whole lot. All this is overnight. It just, well, let's see, 02. Yeah, about the midnight. Yeah. What's that? 1700. It was. You may get a move.
Nothing major.
Previous day. 1600 is 4. Opens back up at 6, which is what, 1800. So yeah, from the opening of the day, which is here, till all night, you see, it's just not a whole lot in the NASDAQ.
Yeah.
And any futures is going to be that way because it's a U.S. market. U.S. is not up overnight. So something you have to just understand about the markets. Can you trade overnight? Sure. There is sometimes going to be moves overnight that are fairly nice. but it don't always happen.
Yeah.
Don't get caught up on that, thinking that it should always happen because it just doesn't. There's not enough going on. The go ahead.
So since there is stuff going on and we are novices, I mean, if we just have time or whatever, should we just do it or anything or?
Say it again, Crystal.
I said, since we are novices, I said, is there any benefit to just at least looking at it or studying it, in the interim, the later hours?
There's other things you can do overnight.
Okay.
Like market replay, the previous.
Okay. Okay.
Definitely other stuff you can do, which I do it all the time. Like on the weekends, I'm on market replaying the week. Say, okay, what did I miss? And how can I get better?
Gotcha. Okay. Yeah.
Okay. So this is just so you understand the structures and when, where to trade. But this is what I do every day, set this up. Because at least this part of it to know, well, 8:30, I definitely want to know what the high and low is prior to 8:30. So I'm looking for certain things in the market to say, okay, this is what possibly could happen. So this line, see that candle, okay, put it to the side for the time being. All right, so that's my 8:30 there. All right, so let's see, go back to structure. Yeah, all right. Go back to that daily chart. Daily, okay. So here, I already know I got that. So I'm seeing on this chart what the bias for the day possibly is going to be, which is up. Go to the 15-minute, and now I'm looking at where is my current high and low prior to 8:30, because I'm not really going to start trading until 9:30 when all the volume really flows into the chart. It's rare that I will take an 8:30 trade. I'm not even up, honestly. I'm up, but I'm not looking at these charts at 8:30. I usually don't get started until at the open at 9:30, and I'll go to 10:30, 11, 11:30 if it didn't happen early enough for me. All right. So all I'm looking for in this case is it sweeping a low or high that I can take that trade off of and continue on? But I want to back up before I get all into that. First, I want to teach you this particular strategy of what we're looking for when we look to take trades. And I'm going to go back to the daily chart to show that to you. Put it all there. Yeah. Okay, so what we look for, I'll come back over here. This is a good way of doing it. When you understand highs and lows, I showed you the high markets making a higher high, higher low, higher high, and all that. So we see that this is an area where the market did what's called a retrace and then came back and broke a previous high. This first before I go there. Let me go to concentrate your eyes on just these two candles right here. I'm trying not to jump the gun with y'all since y'all are brand spanking me. Just look at your eyes on these two candles right here. And this is the previous day, of course, and you have the day before. Actually, these three candles. Let's say three candles. Every candle has a range. A range is its high, the distance between its high and its low. High and low range of the day. Okay. At the high of the candle or at the low of a candle is liquidity. When I talk about liquidity, that is where traders are putting their, you got to understand the terminology, putting their stops. And I'm not talking about stop losses. That could be a buy stop or a sell stop to buy or sell. It could also be stop losses, but if you'll hear somebody say, okay, all the stops are here. Those are trades. Okay, so at the high and low of any range is going to be stops, being that if a trader believes that this market is going to go down, then they are going to put their stops above that candle as a stop loss in case the market comes against them, or they're going to say, okay, if it's hitting this area, I'm going to put a sell stop to go down. Either way, there's going to be stops above this candle. That is money. It's liquidity. The market moves. It's basically moving by a analytical formula that is set to look for areas of liquidity at every time frame, all day, all night. And it can switch up at any moment. Now, it delivers this market in what's called a fashion of proficiency, or it can be non-efficient. Now, I'm going to show you what a proficient, it's a term, delivering of the market being efficient. I'll show you what the difference is versus an inefficient market. And well, first off, I'll show you what, proficiency is this. You look at this candle, this candle, this candle, this candle. You see this candle came down, closed back up here. Then the next day, the market came down, closed here. Then the next candle came up here and closed down here. And then this candle came all the way down here, or came up here and closed all the way down here. Now, here, between here, here, and here, all of these are efficient. Why is that? Taking those three. Go ahead. Huh?
You said efficient?
Efficient.
Okay.
The reason it's efficient is there are no gaps between these three candles. You have the low of this candle, you have the candle in the middle, and this candle is touching that first candle. See the wick here versus the wick. The low of this candle, it went inside of the previous candle here. Not this candle, but this one. Looking at three candles.
Yeah.
Then you had between this candle, and this candle, this came down here, but this candle did not touch that candle. That is inefficient. Okay, it's called what's called a fair value gap, or a what's the other term for it? Escapes me at the moment because I've been listening to people call it different things. Gosh, what's the word? It'll come back to me in a minute. For now, it's a fair value gap. Okay, so a fair value gap means that because this is an algorithm, it is set to fill fair value gaps. So what will happen is the market may move away from it to create the gap, but then it will come right back to the gap in an attempt to close that gap. It may not necessarily close it all the way on the first attempt, but it will come back to at least the opening of that gap between those two candles. That is very important to understand, because this is a part of our trading strategy, is to recognize fair value gaps. You guys follow me so far?
Yeah. I mean, I see it based on what you're just demonstrating, but if you were playing out live, we're not even recognize it, right?
I'm taking notes to circle.
Yeah, and I'm
it's like, conceptually, I understand you, but I don't know if I'll be able to identify it. Okay, Crystal.
You're going to have to identify this because this is something that you're going to practice on. So, okay, no problem. All right, but let me do this first. Not that one. Where's my dog going? Oh, so on the chart, that's fine. Let's see, let's do this. Stop sharing. And I want to share a whiteboard. imbalance. That's the word. Think of that word, imbalance. It's either fair value gap or imbalance. So a fair value gap or an imbalance. Doing this with my mouth, so if it looks ugly, I'll just deal with it. Or an imbalance. Very important concept to learn. All right, so with a fair value gap or imbalance, what we have to do, and let me see, I've done this in a minute. The way to see a fair value gap or imbalance is by three candles. You always have to have three candles. So the all right, so this you have wicks. So this one between these three candles, what you are looking for is the low of that candle. Then you have one. Yeah. Change this. So now everything is got to figure it all out again. Anyway, that's the first one. This is my where's the drawing to? Let's say. Okay. 2, 3. So first candle to third candle, what you're looking for is the gap between the low. If it's going down, you're looking for the gap between the low of the first candle to the high of the third candle. If these 2 points don't touch, that is a fair value gap or imbalance. You hear us talking in the group, nobody says fair value gap. I get this is look at other people say that. But you'll mostly hear us say imbalance. Okay. You need to be proficient in finding imbalances. And so I want you to practice that when you get your chart up, Eric. Just go through and mark all the imbalances you see, either imbalance going up or an imbalance going down. This is an imbalance going down. This is a sell imbalance. If the imbalance, if it is going up, it would look like there's your fair value gap going in a or a going up or bearish. This is down or bullish. I'm sorry, bullish going up, bearish going down. So you may hear a couple of different things: bear and bull, bear being down, bull going up. this case, this is a bullish fair value gap, one that you would buy out of this. This one you would sell out of this when the market came back to it. Here you would buy out of it when the market came back down to it. Okay? It's important to know the difference. Any questions on the imbalances so far?
I do not.
Crystal, you good on that?
Yeah, I'm good.
Okay. I'm about to do the actual chart.
But
It does. It happens every. I'll show you. I'll show you in every chart. Don't worry. Okay. No questions on
but
this.
no, but I'm gonna take a screen grab of this real quick. Okay, I'm good.
Yeah. All right. Let's see. Let's get out of here. Go to.
Oh, wait a minute. Can you pull it back up? The app that I used, I thought it grabbed it, it didn't. Or did you totally wipe it out?
Which I can.
Chris,
Oh, there it is. Yeah. It,
thank you. Sorry.
it should say it.
Okay, I definitely got it this time.
Okay. All right. All right. That's that. Okay. So sharing. Share. Okay, so back to the chart. So here I am on, doesn't matter the chart. This happens to be a 15-minute chart. Can you see where there is a fair value gap? Where there are many. Can you point them out for me?
There's one between, looks like 2 and 3.
Are you saying list that you saying between
yeah, right there.
2 and
215.
and what now? And what'd you say? Is it?
So the candle, 215 and what is that, 230? It looks like the candle is hitting, that's not an imbalance though.
None of this is, all of this
Okay.
is, well, there's a small one right here.
Okay.
There's a small one right here. Very small. We'll look,
Yeah.
see how the market comes back in to attempt to close that.
Okay.
Right. There wasn't one there. Still one here. Very small one right there. Came all the way back in to close that one. Up there. This one here. There's one above it. Huge one right here. Another one there. They are all over the place.
You included all 4 because that's where this large one is like at just like.
Say it again.
So that's where I was looking, like 8:30, 8:15.
Yeah, that's fine.
Um,
But,
but it's just those 3, the green and then the 2 red, right? Because you got
just those 3 candles. I'm just
Got it.
Okay.
But yes, it's between here and here is the imbalance. Here and there is the imbalance. And there, here, and here is another imbalance. Here and here is another imbalance. Nothing in here, nothing in there. close. If it is one, it's nominal. I wouldn't be cool with that. Coming down, let's see, is it one? Yep, there's one between here and here is an imbalance. So that's the end of the day. Yeah, we'll see with that. So they're all over the place. Um,
And the identification of these is happening like live. It's not the fact of like what you were doing, saying as far as like looking at yesterday's close. This is
those were
once you
15-minute charts, so I'm seeing it from the previous 15-minute candles that created. Yeah, I'm looking at, so basically when you're looking for the setup itself or what you're looking to trade, if I know that, okay, the market is, and I'm showing you on a daily chart here, let's say over here, over in this area. And I'm saying the market is, I'm looking for this market to go up. Why am I looking for it to go up? Because I can see this area right here, a point here, and I see this. And I see nothing but space over this area. That tells me there's liquidity, there's money that the market wants to come get this area. So it's gonna come that way. What I'm
Repeat that again, please, Chris.
say it again.
Can you repeat what you just said?
I see areas of these highs and lows.
Yeah.
I know those are areas of liquidity.
Okay.
The market wants to come get those areas. But I'm also looking at we're in a uptrend. I'm getting higher highs, higher lows. Market should come up to get this liquidity at some point. Could come back down here, but it's not breaking lows for me to go look for that down there. So I'm going back. I'm looking to go continue in this direction. Okay. But because the market is designed to manipulate you, what it's going to do, you'll always see if the market wants to go up, it has to go down first to go up. In some form or fashion, you're going to see a downwards move before it goes up. Okay. So when that happens, or when it gives me that signal that I'm saying, okay, this could be a change, which is what we're looking for. Let me clear this. So we have this upwards movement here in the market, and I get to a point where it broke those highs and continued up here. And I got this pullback. The reason I know that this is not going to go any further is because the market came here, did not go get this liquidity. It left it alone, but it decided to come get this. Okay. It also created, what's that? What is that area right there?
balance.
Imbalance.
An imbalance. Okay. So whenever the market gives you a strong move in a direction and it broke, I know it's not necessarily break, you can barely can see this here, but this is an area of liquidity here, was very slight in the market. But anytime you get, and you'll get better at seeing this, I'm trying to just show you a simple example of it where it's easy to see the setup. What you're looking for is a strong move down that creates an imbalance. If you're going up and you want this market to, then you're looking for an area for it to come down. Now, what is it doing first to make this stop right here? Let's look and see if we can see it. I got enough time on this chart. This make this a little bit. I have not, don't have. Let's see, what is a good example? I want to show you. doing it on, you know what? This is better doing it by day to day. All right, let me do it this way, the way it was taught to me. From day to day, remember I said each candle has its highs and lows, and there's liquidity at the high and low of each candle.
Correct.
Okay. So if we just go from, let's just look at this area right here. Here, this little portion of what's happening right here. Okay. So I have, if I go from day to day, I have a downwards candle here. The next day, this market opened here, right? Oops. It came down here. Y'all see the wick there?
Yep.
Yeah.
What did I say was at the low of that candle?
Liquidity.
Liquidity. Market came and got this liquidity and went to the high of the previous. Okay. Next day, closed up here. This candle opened up here. Now, this is what where the liquidity right now is above this candle and below this candle, right?
Mm-hmm.
Okay. So in this case, you have the market come up. It went up there, decided not to go get any liquidity that happened above it, but it decided to come down back into the range of the previous day's candle. Didn't get all the way down here, but it closed inside the range. So basically what it did was it grabbed the liquidity of the previous day, came back into the range and closed. Well, what happened the next day? Opened here, did not go up here to come get this liquidity, but decided to come get the liquidity that it did not get the previous day. So came down to here, closed here. Where's liquidity now for this day? Here and here, right? Follow me?
Yep.
So
I love it.
okay. Then there's also,
From 2 days before, it looks like there's still liquidity there.
so there's also liquidity. Use my drawing tool so this makes clear sense to you. So this is how you kind of have, you'll start to see the market this way as you go. All right, so we had liquidity down here. Market came and got that liquidity, closed above and got this liquidity. Next day, it decided to take the liquidity that was above that candle, didn't want to come get this liquidity. Remember, at the high and low of every day, even on lower time frames, it's the same. At the high and low is liquidity. There are stops that the market wants to come get. It has to come get it before it can go anywhere. Otherwise, then let me explain that before I move on. Think of it like this. So if I have $1,000, and if you think in terms of an institutional trader has billions and billions of dollars, okay? And they want to move the market in a particular place. In order for them to sell or move the market down, they have to have buyers. That's going to take their sales. You follow me so far?
Yeah.
Yep.
Okay, so I'm saying I'm a big institutional trader. I want to go down, but I can't go there if nobody is buying. So what has to happen first is I have to manipulate the market to think that I'm going to go up. So they start buying, but I want to sell. So as long as people are putting buy orders out there because I did this as the institution or the algorithm, because the institution follows the algorithm. So what's going to happen is this is the manipulation to make retail traders like us do something opposite of what the market actually wants to do. You follow me so far?
Yep.
So you have to understand as a trader That is what the market is always trying to do. It is trying to manipulate you as a retail trader to do opposite of what it wants to do so it can take your money to do what it wants to do. The winners know how to find that and follow them. The people who lose are the ones who get manipulated.
Follow. Right.
They get manipulated. And we even get manipulated. Still, sometimes it fools us. But the more you get into this, it won't as much as it did. It still does. It's always going to, because you can't, there's no such thing as a person that wins 100% of their trades. There is no such thing, because the market is it is designed to manipulate you. It does all kinds of crazy things. You just have to be patient enough to know when it's manipulating you and when it's not. And know that when you're in when the market is in a manipulative state, not to trade that. Don't get caught in that. But you will, because we all do. That is why you have stop losses. Okay, back to this. All right, so the market is manipulating up so it can do this move here. In order for it to do that, it's got to come get liquidity up here first to make that move. Right? This is why you see these wicks, because it's rejection of price back to a range. It does this all day long on every time frame. Doesn't matter. Okay. So go back to the example, liquidity at highs and lows of every candle. This is how we can tell the probability of the direction of the next day, or the direction of the next 15 minutes, or the direction of the next hour, because we can look at that chart and say, okay, the previous day or 15-minute or hour or minute did this, and then the next day or 15-minute or hour or 30-minute swept the high. Or it could say, in this case, it could sweep both. But in this case, this was a downward candle that closed here on the previous day. Liquidity is there and there. The next day, gapped up. There's a gap between, this is not a fair value gap. This is a gap because it opened up here after it closed down here. It's called a gap. And went up here to take this liquidity and snatched it and came all the way down to get this. Then it came back into the range and closed. The next day, small gap up, came up, manipulation once again to go down, then came back down to get this liquidity. Closed back up. Now, it's also looking at previous old liquidity here. Oh, shut up. So like here, that is old liquidity. Remember I said the high and low, it didn't come get it there, but it came back here to get it. Swept below on this day, closed back in, dude, shut up. Came back in, came back in, closed below, not closed, I'm sorry, it swept to get this liquidity, came back into the range, not necessarily of the previous day, but a range of here, this range, came back into that range to go up to now get this liquidity. Y'all follow this pattern so far? At least the concept of it. Do you get the concept?
Yes, absolutely.
Yes.
Okay. So, and I'm just going to keep following so you can see my points of what I'm saying. All right. So, Kane got that, went up. Here, it decided to get this liquidity and closed up top. Now, as you're coming into the market this day and you see this happening, all right, came down and got that liquidity, came up to this day and got this one, potentially it could go up to get this liquidity. Could. Doesn't necessarily mean it has to yet. But what happened was it decided to go and get the previous, on this day, it went and got the previous day's liquidity, came back down and took all this day, didn't go get that, which is fine. So all this means to you is, and this is in a 15-minute time frame, this could be a huge move from here to here early in that morning. Now, we don't know exactly the time, how long this took to happen that day, but this could be a situation where in a lower time frame, where you saw yesterday's close, yesterday's high, sweep that in a 15-minute chart early enough when you came into the market and said, okay, oh, it swept the high of yesterday. Now I want to take this down for the rest of the day. And this is how we map out our days, by looking at this daily chart. We can get a general idea of what the market is likely to do next, okay? And what area it should go to next. And we do that breaking it down every time frame that we're trading. So we know, we don't know, we have a high probability of knowing what's next. But if we're wrong, we have our stop loss in place. Okay. Am I making sense so far?
Yeah, so if I can, so basically when you're starting out in the morning and you're trading between like 9:15 and, like you said, 11 o'clock,
yeah,
you're doing your homework, the previous.
Just looking at the next, just looking at this, like this is,
right. Yep.
Okay. So all I'm looking at Monday, because it's the start of a new week, I want to go to the weekly chart.
Yep.
Do that. Okay. Each candle is a whole week. Okay. So, and I'm starting the next, this week is done. So now I'm looking at, okay, where's next week usually are likely to want to go first before it does anything else. What do you think? Just on what I've shown you so far, what do you think the possibility of what Monday could do first before it does anything else? What do you think it wants to do?
Get the liquidity.
Think of it as, where's the closest liquidity that it wants to come get first?
Yeah.
Yeah.
So what do you think the next week will start? Where do you think it will go? It closed here.
Right. So there's a next point, like the above. So
yeah, I was
right
thinking
over.
above.
Yeah.
Right. That's
Yep.
the area, closest area of liquidity that it hasn't gotten. So
Right.
that is the likely next point of where Monday possibly will go to. Now, we don't know if it wants to go get it or if it will or not, but it's most likely that you're going to get a move up on Monday before you get a move back down. Okay, and this is the week. Remember, there's 5 days in this candle.
Right.
Okay, so when we come back, if I'm seeing this, and that's okay, likely to go up on the weekly. If it doesn't go here, it'll definitely want to go here because this is the next high. I didn't tell you what the high and low. A true high has 2 candles below it. They don't have to be higher or lower, just 2 candles that are lower than its peak. So that's a high, that's a high, that's a high. This is likely a high. This is a little bit above that and that. See what I'm saying? Those are all highs. Those are areas of liquidity that you want to target. Now, you may have these areas in here, but these are minor liquidity areas. The majors are the highs and lows. That's a major low, major low, major low, major low, minor, minor. All these are minor till we get to the major. Major here, major there, major there, major there. It's close. Well, you got double, which is even stronger liquidity. Okay. So when we look at that, now we're looking at ranges. I've shown you candle to candle, but that pertains to the range of a high to a low as well. Follow me?
Yeah.
All right. So knowing that, if I said mark out the major highs and lows on this chart, what you're seeing right now, this is what you should be looking at. I don't need it. Okay. Let's see. Major low, high, high, yeah, low, low,
Really low. Low again. High. Low.
Before you go further, I have a question.
say it again.
I said, I have a question before you mark any further. So like right at like uh, June, July, like where you mark that low, and, yeah, right here on that red. Yeah, I was just looking all the way back up to like about August when you marked that high. I wouldn't have thought that um was something to mark, like that other red candle right next to where your cursor is. And how is that, I guess, high to mark? 'Cause like I said, I was looking at the next one, but I just didn't think that.
This one?
Uh-huh.
Okay. Does it have two candles below it? Does it have two candles that are lower than that peak?
Yeah.
Yeah.
And that is a high.
Okay.
Yeah.
That is the rule.
Okay.
That's it. It may be slight, but that is the rule. As slight as this is, that is lower than that. And so is that. That is a low. As slight as it may be. Okay.
Okay.
All right. So let's see. Oh, this was two. That. This. And very slight, but it's there and there. Here, not yet. There. Okay. So those are your highs and lows of ranges of candles. Those are what we want to concentrate on. Highs and lows of a range. Questions on highs and lows of a range. Got it?
Yes.
Yeah.
Okay. That and go, that's the weekly. So now let's go back to the daily. Okay. So now we're back to the daily. We're looking at previous highs and low ranges of where the market is likely to go to. And again, we do this on every time frame that we're working with. The ones I showed you, daily, 15 minute, and then it'll drop down from there to 5, 4, 3, 2, 1. But so first thing is daily. So I come in here and I see previous previous high has been taken out. Next area of liquidity major is way up here. And we're right here right now. Now, so I have to look at this as where are potential areas that the market could turn on me that's most likely to happen, and where are areas that are what's closest to it that it may want to go to next, and where are the where are my fair value gaps or my imbalances? So it's going to go to that too. So high and low of range, high and low of range, imbalance, and then also, yeah, high and low range and imbalance. That's what you're looking for. What's the closest? Now we're in a situation here where this could decide. Now I do have these pivots in because these are areas that the market will react to. Doesn't necessarily mean it's going to turn around on these, but you know that if you're in a trade, you're going to get some resistance here or support down here, depending upon what you're hitting. I just like to look at them. But in essence, the market still should come up to this point before it decides to go back down. Doesn't mean it won't go back down from here and play around, because you have what below it? Balance, imbalance, big imbalances below. So what this possibly could do is play around here, because we did look at the weekly for it to go up. Now, remember, it has to go up before it can go down because it wants to manipulate. So it could come up a little bit and not go get this liquidity yet. Could say, you know what, let me go clear these imbalances first. Could come get that, leave that one down there. Could say, let me go get that, come up and get this liquidity, then come all the way back down here and get this liquidity, and then go all the way back up here to get this liquidity. It's what the market can do, but it's giving you an idea. The thing is, you know how to read it when you start practicing it. Okay? All right, so understanding that part. Any questions so far?
No.
I still haven't gotten to the setup. I just had to show that first before I go to the setup.
Yeah.
All right, so let's do that now. All right, so here's what I'm looking at for a setup. And there's a few different ones. Okay, so here, the latest one let's just go here. It's the latest big move down. He goes up to. So we had this high, this low, those areas there. This market decided at this time it was going to go break up here, broke liquidity, or broke a high with an imbalance in the high. This is an area of potential sales to the upside. Okay. You could have taken a trade. This is a daily chart. We wouldn't take this, but even if you saw this on a lower time frame, coming into this imbalance, you could take a trade out of here, anywhere in here, to go back up to get this liquidity. Now, didn't decide to do that, which is okay, because all we're looking at is getting, you'll know that it won't necessarily get this by, I'll show you some other things where there's some other things here happening, but just for this sake of what I'm showing you right now, the normal way of this, or the likely way, is that if it's going to continue on and not reverse down, it's going to come get that liquidity at that high. Decided not to do that. Signal that you know it's not going to do that is it broke below this liquidity. This broke below this liquidity. Okay. Now what I'm looking for is when it broke below that low, or area of liquidity there, when a strong move down, where is there an imbalance inside of this area that I might be looking for? Where are the imbalance? Where did it create an imbalance? First off, you guys see an imbalance? Yes or no? Crystal, Eric,
Where you have marked already?
in this move down, do you see an imbalance? After it broke this,
Uh,
hmm?
I'm gonna say,
You don't see any? You saying, well, what are you saying?
I don't,
I think yes.
Okay, where are they?
and I was gonna say no.
You're gonna say no. Okay. Krista, you said there is an imbalance. Where do you see an imbalance?
So I'm thinking it's one. I don't know how to describe it. If I had, can I take? Is it a
Yes,
little
you can. Go ahead. I'm gonna clear this first. Go ahead.
uh, so I was thinking,
There, yeah. Go ahead. Mark the imbalance by doing mark the high and low of the to show the imbalance, not a circle. Do it. What I just showed you there.
I feel like I'm in class. I'm scared.
Are in class.
I'm nervous. I mean, I am, but
I
now
mean,
I'm
you
nervous.
are.
Okay to be wrong.
But now I feel like I'm in the front of the class and like all these eyes watching me. Okay. Oh gosh, where was I? All right, now you got me nervous. Give me a second. I gotta look back at my notes. Going below. Oh, never mind. Where I thought it was, like, yeah, you're right. Because now this one will be the top of this one. The top of this
So the
one.
high and low of the imbalance. Mark it out.
Yeah. So I'm not right.
Where what is I see one line. Where's the other line?
Well, there is no other line.
There is a that's well,
I mean, there is
there's no
another
other line.
line, but it's not going to be the imbalance that I thought it was.
Okay, so fine. Is there I'm asking y'all, is there an
I know, but see, this is what
Why, Crystal, you ain't gotta yell at the man. He's just trying to help us.
I know he is, but I'm telling him it isn't. But he keep pushing for me to make another line when I know it's not another line because I made a mistake.
Do you see an imbalance? Yes or no?
No, sir.
Do not see an imbalance. Okay.
Not
Dwayne, come here.
Sorry, what'd you say, Chris?
I'm calling for Dwayne.
Okay.
So you said, Eric, you said you didn't see one either, right?
No, sir, I did not.
Eric, do you see an imbalance in this move that I'm not Eric? Dwayne. Where's the imbalance?
Today, the the 19th of, no, I mean September 19th
Was one of the
to September 21st.
So that one and what now?
To September
To
21st.
September. Do you not see between those three candles? Do you see an imbalance? Eric and Crystal.
So I mean, it's slight, but I guess
Not even slight. It's a huge one.
there,
That's the low. That's the high. That's the low. There's also
Here.
say it again.
you're breaking up.
Was I looking in the wrong space? Because
I said it broke this.
There, correct.
This move broke this.
Yeah.
In this move, where is the imbalance? There's actually three imbalances in this move. There's one there. I just marked the second one.
Mm.
And there's one below.
See,
Three imbalances in this market, in this range. Okay. So these are three potential areas to trade this range as the market comes back to it. Here's the first one.
Dwayne.
What's drawing your eye initially? Are you looking for just the
You have to train your eye to look at three candles and find between the first and third candle. Let me erase this.
So on the
Between candle one,
yeah,
candle two, and candle three. The low of candle one, the high of candle three. Are they touching? No. There is an imbalance. There is a selling imbalance created by this big candle here. The sellers basically were not fair to the buyers, and it created an imbalance.
okay. So what I thought I was looking at, Chris,
Okay.
was between candle 2 and what would have been the red section of candle there. And that's why I was saying I didn't think that there was an imbalance there.
There is not between 2 and what would be 4, I guess.
Yeah, okay.
But there is between 1 and 3.
3.
But there's also one here.
From 3 down to what?
1, 2, 3.
Yeah.
Big move down, imbalance. Big move down, imbalance. Big moves create imbalances. And that is what you look for. You just want, it's not every single imbalance you care about. You only care about the ones that broke a range and broke it big.
Yep.
That's all you care about. Because we know the market is going to come back to an imbalance. Now, which ones do we care about taking trades out of? Well, here's another clue for you, or another little tip for you, or rule, or however we want to say. You could say, I need this. All right. This is a Fibonacci tool, but I'm only marking, I have it set to where it's 0, 50, and 100. All I care about is the high and low of that range. Is that the high? Is that the low of the range? Would you agree with that so far?
Yeah.
Mhm.
Okay. Anything that is inside of or greater than, I'll say greater than, but less than 50% into the range is considered premium pricing. What I mean by premium pricing is institutions want to get discounts. So they rarely will take big moves out of premium areas of a range between here. Let me do this. Between here and here is premium of this range. Between here and here is a discount of the range.
Mm.
So this is premium pricing, this is discounted pricing. Institutions want discount pricing. What that means is they're going to do whatever they need to do to get to that discount price. And you want to be able to see that. So what's in the discount pricing area of potential areas that the market is likely to come to that you know it can trade off of? What's there? In the discounted area, what is there? It's not a trick question.
liquidity?
The imbalance, right.
Yeah.
There's two of them. It could come here, or it could say, I'm coming to get you. Well, what did it do? came right to the most discounted imbalance and turned around to almost to the tick and made the biggest move out of that area. Now, it also made moves out of these premium areas. But now, again, this is the manipulation of it here, but it still is areas you could take trades out of because there is an imbalance on a daily chart. Remember, we don't trade the daily. All we care about is getting a nice move in a 15-minute, 1-minute chart, or even 10-second chart. So from, just so you can see that, from, oh no, from, let's see, you see this in the premium area of this range is an imbalance, right? So it could come here. It did come here and it did react to it, right? Well, if I said in a lower time frame, there's an imbalance here, let me go see if I see in a 15-minute, do I see an imbalance there, or and do I see it again on the 1, 2, 3, 4, 5-minute chart, or even 10-second chart? Do I see the same thing happening down there? Well, that's a huge trading opportunity, because if I took this and took it to the low of this area here, where it did come to, that's 456 points. What I'm looking for, the big move, is here in the premium area. I'm sorry, discounted area. And your stop would be here. You wouldn't take it all the way down here. You take it to the low of where liquidity is. We're not going to be greedy. 883 points.
But Chris, can I just say, a bit overwhelming. I mean, I know you've been doing it a while, but I'm like, wow.
Can be, but I wanted you to see the setup and why we're doing what we're doing.
Why? No, conceptually, it makes sense, right? At the end of the day, but I'm like, wow, it's a little bit overwhelming.
Yeah, you're right. It can be, but I want you to see the setup. That's all I want you to do.
Yeah.
Crystal, you got quiet on me. Do you see the setup?
Yes, she did.
Yes, I did. I just took a screenshot so I could study it.
Oh, did you?
Yeah.
Um,
So, Chris, do I need to even go back and study that other stuff, or are you not even talking that anymore? Like, what is it? Mom, Dad, and K.
Crystal, your microphone's messing up again.
Oh, sorry. So with this, what you're saying today, does that mean that I even need to go back and look or study the other stuff you talked about previously about like K and Mom and Dad and?
that's on the that's going to help you with the entries.
It'll help me with what?
The entry point.
Okay.
Because there's entry, just so you understand why we use Top Dog, because Top Dog is going to tell us when, let's say if it was this area here, it's going to tell us when did the momentum shift change.
Okay. Well, I don't want to move too far in advance. Yeah. I want to still take this like I don't know about Top Dog.
For having it. It's just not this. This is the setup itself. Before you look at Top Dog, you got to know this to know where to look at Top Dog.
Okay. Because I don't want to jump too far ahead. I just wanted to make sure, like, if that's going to be a part of this, so I need to just ignore that or whatever. All right. But we'll get to that point again.
And look down here. You see this low? Just to point out something. What did that come out of? Why did this turn here? Why that point did it turn? It came out of this imbalance, but it also went into, this is considered a zoned area for this to come out of. Not zone, but a order block. Order block.
What's that called?
Not even going into that yet, but it is, you have an imbalance plus an order block, which I'll talk about that later.
Did an order block?
Order block. Any concession of candles where you have a turnaround. So in other words, this here to here, and the market went back up, and slightly is one, but it could be one candle, it could be three candles. Any succession where the market turns around and goes the other way is creating an order block. This is an order block. Yeah, two candles here. Should be more candles, is it? Yeah, just the two. Yeah, two candles and it turned around hard like that and broke the high of the top candle. This is an order block. Now, we're not even talking about trading the order block, but that went directly into the block that included an imbalance and turned around. But you'll learn all that stuff as you go. I'm not even teaching you order blocks right now. This is just looking at the imbalance. Okay. So what I want you guys to do is to recognize the imbalances, that the most important imbalance, not just any imbalance. I want you to see which ones are most important. The most important imbalances are the ones that break a swing, whether it's up or down. Okay, here's a swing. You had up, down here, and then shot out of it. The part that it shoots out of to break this area, do I have an imbalance in here? Yes, I do.
Yes, you do.
Right there. And where did the market come back to? Right into that imbalance before it continued on. Nothing here. This is a slight one here. But no, I won't include that because we didn't. I'm going to say just look at the major swings. So I showed you the major swing areas. Where are they broken? You had a break here of this major swing, right? Here is your swing, break of that swing with this big move up. Where's the imbalances? Here and here. Market came down into the imbalance, and it can go below. Just didn't close, came back into it. Went back up, but where did it go back up to? Another imbalance.
Yeah.
Right there. And turned around to break another swing to the low. Broke this swing to create what? Another imbalance. Where is the imbalance once it broke? Came right back into it to continue down. Now, this happened to be a small little swing. What did it do? Once again, created another imbalance after breaking a swing. Right here. Market came back into it, closed inside, came back down a little bit. That's okay. In a day's trading, this was money made to go back up to take liquidity. Didn't have to be an imbalance. Remember, we look for imbalances and liquidity areas. Above a swing, did not close above that swing. To come all the way back down. To where? An imbalance. To do what? To go right back up. To take this liquidity and come back into, not never closed this completely. It just got a little bit more of that imbalance. Here. To go right back where? Back to this imbalance. I can do this all day long. And this is what it does all day long. To go back to, you had an imbalance here, which actually that is viable with this move here, but we won't include that. We'll include it. Came back to that imbalance. But what did it do? Created what's above this candle?
Liquidity. And I know.
Liquidity, very good. Came back into the imbalance, still hadn't broken it, came back up to come get what was created earlier. Once it got what it needed, shot down now to break this swing, created what again? An imbalance. Came back up, decided, oh, wait a minute, no. We had two imbalances. We're not done. Came right back into the imbalance to go down to where? To get what? Now, it didn't come all the way down here, but it came right to it. Close enough. To come right back up into what? An imbalance. We mapped out. To come down. Played around in here, manipulating a little bit more for those who got this right. Mark, oh, let me just fake y'all out so y'all don't go with me. Because this is still manipulating the market right here. Comes down, breaks this low to create what? Once again, another imbalance. That came out of yet another imbalance, an older imbalance that was never completely filled, way over there. Y'all see how this market does?
Yes.
This came deeper to get this liquidity is really all this was, but it was still inside of an older imbalance. Getting this money down here, broke these double lows, liquidity to go back up into an imbalance, to come back down now into this area, which is also an order block at the low, which we're not even talking about, just looking at the imbalance. And now shooting back up, closing all these imbalances, creating even more imbalances for it to come back to later, and possibly going to come back up to here. This is why I say I'm looking for it to come back up to here before it comes back to clear these. Do you see how this is all mapped out? How you can map it out yourself?
I'm starting to see it.
Okay.
But your eye has had years of practice at this point. But
I'm fast track here. Because I don't see y'all as much. I'm telling y'all, if y'all get in there and once I can download this and just study what I've gone over here for you and practice it, because it's only going to make sense to you once you get in there and practice and see it for yourself, your own eyes. You got to see it. I can't see it.
How do we set up and do like a market replay so that we can study?
You don't even need a market replay yet. You need to recognize these first before market replay comes when you're ready to trade. You're not ready to trade yet. You need to understand.
Well, I know, but in the past, you would always give us like a sample. I guess I just a sample chart to look at or something. So I was asking about the market replay.
I'm gonna let you pull up your own sample. Just pull up a chart and mark it and send that to me. I don't need to say it, and I can see where they are. You can see where they are. They're all there.
So what you mean is like how when you step me through logging in today and whatever pops up, just use that.
Mark it out.
Okay.
That does not matter. I don't care what time frame. It doesn't matter. Pull up a chart and mark it up. Give me imbalances. First off, I would say two things. Pull up a chart and just do highs and lows of the ranges. It's for you too. High and low of the range. This, meaning go through a chart, pull up a chart, I don't care where it is, the side or whatever. Okay, that chart. Highs and lows of the range. Show me where the highs and lows are and take a picture of that. see this Google lines, but y'all get my point.
Yeah.
Take a picture of the highs and low ranges. Okay. Then get a new chart or a new screen of candles. And find the imbalances. With the imbalances, I want you to use the rectangle and mark in where you see imbalance. Imbalance. Just from left to right, imbalance. Wherever they are, just find them for now. Yeah. This is here. Y'all follow me?
Yes.
Then, look, for now, just do that. And then we'll get a little more detailed of mark only the imbalances that break ranges. We'll do that later. For now, just find highs and lows and a chart for highs and lows and a chart for imbalance.
So just and it's only a 3-candle thing, right? Where you're looking at the first and the third. Because when you have your rectangles, you be going so far out that I'm just like, okay, so
I'm pushing it out to the future. I need to push it out to the future because I want to see where the market's going to come back to inside of it. That's why we have this space. You're starting over here, but this is done for now. We're not going to worry about that. I'm also concerned about what's going to come to here when we're trading. Like this is the most important imbalance right now in this picture is this one. But I want you guys, because you're learning this, just mark them all so I can see them.
No, I get that. I was just saying, in the example you had up there, it looked like it included about 8 candles. That's what I'm just like. But I'm good now.
So you got the homework? Well, first, Eric, get your stuff up and going. Need help, man? Just hit me up.
Yep, I'm ready to head to Winter Garden, and I will definitely do that. Thank you, sir.
Eric, what is your personal email? I thought I had it, but I do not.
I will send it to you now.
Okay. Because I get caught up in other stuff, so I'm gonna shoot you these files now.
Just put it in the chat.
Okay.
Yeah.
Yeah. Thank you, Chris. Because my brain, I can't take no more right now. But
thank you, Chris. I can thank you enough. Thank you.
At my breaking point, I see now why, like when you used to have your classes and I done did a whole day of work, like I may have was catching 5-10% of what you were saying. Because it's a lot.
Good.
Yes, but just take it on just what I said. We're only doing 2 things. I showed you all that a lot, but I only want 2 things.
No, today, yes, of course. I'm just saying, like
highs and lows and imbalances. I got it.
That's it.
That's it.
Worry about all that stuff right now. It'll come.
No, I get that, Chris. I'm just making a comment on like right now, it just is a lot. And I was just making a reference between having a work day and gathering everything that you're saying versus today I'm fresh. I don't have to switch context. That's the only thing I'm saying. I get my homework. Mark highs and lows of the range and find the imbalances using the rectangles. I got it. I was just generalistically making conversation. But thank you. And the files are on the way, Eric.
All right. When is our assignment due? You need it by Monday, Tuesday. Are we planning on a follow-up session next week? Do you want the homework by then, before then? Help the teacher.
You talking, Chris? We can't hear you.
As soon as you can get it to me.
Okay.
Prior to us meeting again.
But so since we are here, Eric, what are you thinking of? What do you think as far as like having another session with him? Like, or is it better on the weekend? Do you think we can grab one during the week?
I like I said, Crystal, I'm flexible now. I can't do next Sunday, definitely, because I'll be out of town. But if you want to do something during the week, if we have an assignment turned in by Wednesday and we want to schedule something for Thursday, that works for me. Or something like that. So, I mean, I can be flexible from this point on.
Okay. If we said Thursday, Christopher, what's your schedule or calendar looking like?
Thursday, I'm good. What time?
Ooh, I like this.
What time? Give me time. Give me time.
Oh, I'm gonna look at my calendar.
I've got between 11 and 1, I got North Highland stuff, but anytime prior to that or after that, it looks like I got time open.
Prior to 11, so after 11.
I'm good after 11. Can we say 1 o'clock? Because I do have a 2 o'clock.
1 o'clock Thursday?
Yeah.
Won't be in this. I'm gonna send y'all the other link because they will probably still be. They use this room for trading. If you guys want to, you can always log in here during the day if y'all want to just view them and watch what they're doing. There, some of them. Let's see. Dante's calling out the trades, so a lot of stuff is going to be slightly different than what I'm showing you here because he doesn't trade exactly like this, but he's highs and lows and all that. He is on that, but in terms of and the imbalances, he's on that too. So he will show you will see that, but how you're going to see him actually go into a 10-second and take trades. I haven't shown you all that stuff yet. So he's going to be talking different stuff as to what he's looking to take the trade. He may say, okay, I'm looking to take a trade right here if I get a hook on with top dog. So you'll see everything in action on that on his chart. Okay. It'll be a little bit more than what you're used to seeing, but it'll be the full deal with some added stuff that he does. Not bad to at least see it in action.
And you said they're on here when?
Every day.
Every day.
9 to the freaking market close. They out here.
Yeah, well, that one lady's on there like at freaking 2 and 3 o'clock in the morning.
Yeah, they are always here. So I'm not here after 11:30. You will see me. You may see me at my face on the screen, but I'm not there. I promise you, I ain't saying that. So, but it's good for you to at least see what he's doing. I'm going to teach you this so that you have this down to a science. As long as you practice these different little points and get good at seeing it, you get good at seeing it, all the rest is going to be simple. Trading it'll be simple once you know what you're looking
for. Okie dokie.
All right.
Thank you, sir.
I greatly appreciate it.
Yes, thank you.
You guys have a good one.
All right, you too. Bye.